There are two parts of the tax code that give tax benefits to people that own real estate. Section 1031 of the tax code gives a tax deferral to people who own real estate that's being used for investment or business purposes, who want to sell that property and then have a replacement property that's being used for investment or business purposes. Section 121 gives a tax break to people that are selling their primary residence. There are actually some situations where you potentially can combine both. I had a client who owned a fourplex and he was married. He lived in one of the units for about 20 years. His basis was almost zero. So as he sold this fourplex for $2 million, he was about to have a very significant tax event. However, because that under Section 121, as a married couple, you get $500,000 tax-free when you sell your primary residence, he was able to take $500,000 from the sale, put it in his pocket tax-free. Then he was able to take the remaining money from the sale and roll that into a number of other replacement properties using the 1031 exchange. Another situation where that can be useful, if you have a rental property that is a rental property today, but in the past, it was your primary residence. Section 121 of the tax code simply says, if you have lived in the property for 24 out of the previous 60 months, then it qualifies for $250,000 tax-free if you're single, $500,000 tax-free if you're married.